Hey, this is Travis, and I'm back. And today you're going to watch me place a trade in my real money investment account. The trade is based on the DMA template taught in chapter 8 of my book, Option Trading Made Simple. And for those who are not familiar with who I am, my name is Travis Wilkerson. I am the 2019 U.S. Investing Champion, as well as the author of the best-selling book, Option Trading Made Simple. But I go by Trader Travis online, and sometimes I talk really fast. Today I'll try to talk slow. One of my clients said, "Can you slow down a bit?" I was like, "Oh yeah, I can do that." So here's the trade I'm about to place. It is a December 2025 470 call option for probably going to get it for about $3,600, give or take. Again, based on a template, read the book several times. I cover all the rules, risk parameters, etc., etc. I just want to, as a bonus for book readers, give these, trade alert videos and also trade alert emails for people on my email list to let them know when I'm making these moves. Now, I'm about 2 days late. The signal to enter this trade it gave is a market timing template. So the signal to enter this trade was about 2 days ago, and I've missed it. I had one-on-one client appointments the last 2 days, and I couldn't get to this trade, right? Now, that leads to story time. So stick with me. Let me share a quick story before I place the trade and walk you through what's going on in my head as I'm placing it, because I promise you're going to, at least in my opinion, find some value in the story because it goes and it explains why I now trade this way. Because I was talking to one of my one on one clients and she was like, "Man, I loved your old way of trading. It's active trading." And she's like, "And then you just switched everything up." She's like, "I like the old stuff." And I was like, "Me too, right?" I liked making, 30, 40, 50, sometimes even 60% on my money every year, growing my portfolio that much. And you know what? I never worried about market crashes because it was an active trading template. And so let me show you an example of what I mean. So one of the templates is a PR template, right? And let me just, give you a quick example of a PR template. It works in bull and bear markets, but I'll show you a bull market example right here. So right here, I see, so, all right. So what a PR template is a highly active template, meaning that there are long-term trends. So I have a 2-year chart pulled up of SPY, an ETF of the S&P 500. Even if I pull up a 5-year chart, the overall 5-year trend is up. That's how I trade now. Long-term trades once a year. It takes me about 10 minutes once a year to manage my portfolio. Highly passive. I'm trying to capture the long-term trends. And again, I'll explain why I shifted. This is the story, the backstory as to why I shifted to passive trading, right? So passive trading, I'm catching the longer-term trend in the market. With active trading, in this 5-year chart you're looking at, there's so many trends within it. And that's what active trading was. We were catching the mini trends. And let me just show you an example here. So right here would have been a PR template entry. And what we're doing is capturing this mini trend right here. And so just in this small segment that I'm pointing to right here on this chart, that was enough for us to often make 20, 30, maybe 40% on our investment. Not our entire account, but whatever we invested in that particular trade. And then when we got an exit, we got out, right? And then we sort through hundreds of stock charts sometimes each night looking for different entry signals on different stocks. And so that's what we would do. We'd get in, capture these little short-term moves, and get out before we lost too much money. Right. And that's the key there. So that's why I never worried about bear markets. We were never in them. We would get an exit like within two days of the market top and we're out, right? In complete cash throughout the bear market. Now, here's the challenge with that. Were we successful? Yes. But was everybody successful? No. And when I sent out a survey asking, "Hey, did y'all make money like us, this year?" Some people were like, "No." And I was like, why not?" And they would give me all the reasons. And it had nothing to do with the program. It had everything to do with the realities of life. Problem was I was younger and naive then. So we're talking about 10 years ago, right? We had people caring for aging parents. We had grandmas. They didn't, their life was so complex, so busy. They had so many things competing for their time. They didn't have time for people like the young bucks like me. Kids were still young. We had all this time to look at stock charts every night, right? Like the realities of their life didn't match with active trading. That's the problem with active trading. You need a lot of time, a free time. Now, 10 years later, I'm a little bit older. I like to think I'm a little bit wiser. Yes, my life got a little bit more complicated. Kids got older, marriage got tougher, parents died, brother had a stroke, right? Stuff was, I started a coaching business. I was like, "Oh, I get it now," right? And Can you guess my age? Most people don't know my age, but I am closer to 50 than I am 40. So I'm actually nearly 50, but a lot of people don't know that. They usually think I'm a lot younger, right? So as I matured and got older, I'm like, I get it now. Life gets a little bit more tougher as you get older. And so active trading, yes, still works, but I needed something passive to match with the realities of my life. And the side benefit is that more of my clients had success with a passive strategy versus an active one. Why? Nearly everybody in the world can find 10 minutes once a year to place one simple trade. So that is another reason I switched to passive trading is that it has a higher success rate for most of the people and it can accommodate even the busiest lives because you literally are only placing one trade once a year. All right, so story time over. Let's get to this trade and let me walk you through what I'm thinking. All right, so now I'm ready to place my new trade again. Because the debit spreads were confusing at least one person, I'm going to stick to the single options that's taught in the book. But I'm going to share one of the challenges you'll face if you don't follow the blueprint taught in the book. And the blueprint is, hey, you have to contribute some of your own money to this account to help it grow. That is how you grow a small account fast. Prudent, you know, actively trading options as well as adding money to your account. So if you didn't add money to your account, you're stuck at the 10 grand. So if you had added like $550 three times a month, you have another $1,600 in your account. So your account will be growing. And the benefit of doing that is when your account gets bigger, the amount you have to invest on these single calls and puts also gets bigger. So you can afford the options you want. So in the book, just for the case study, I gave two examples. We picked always at the money options, options closest to the stock price, right? You can do at or even slightly higher. So the stock's at 405. Can I afford this one with a 10 grand account? Yes and no. Yeah, I can afford it. It's $6,800, but it's breaking my risk rules, and that would be risky, risking almost my entire account on one trade. I've done that before. It works until it doesn't work. It is just a stupid way to invest your money and an easy way to go broke. So I'm going to have to take a little bit more risk and come a little bit higher than I feel comfortable going. But again, I'm following the template and I'm showing you like, okay, you only have a 10 grand account. You didn't add money to your account. You stuck what you stuck. And people say, well, do you have other symbols? You could find another symbol. I just haven't tested all that. I only know this works. So anywho, what I'm going to do is buy this option right here. It still breaks my risk rules a bit, but I'm doing this knowing that when I lose what I am required to lose per my risk rules, certain percentage of my account, again, taught in the book, right? I am going to get out, right? I'm not going to play the hope game and let all 3,500 disappear. No, when I lose 1 to 2,000, I am out. Deuces, right? Because I'm already breaking my risk rules. I want to make sure I stay within them. Right. And if I lose that much, I talk about what you do in the book. You either add more money to the account, stick it up, or stick it in buy and hold, wait for it to recover, or take a break, come back later when the market's trending better. Right. But anywho, let me go ahead and place this same deal here. Now, this is opposite. Before I showed you selling, I said I want to sell close to the mid, not the net. Same thing with buying. I want to try to buy close to the mid, not the net. The broker wants me to pay $3,800 for this. No, I only want to pay $35.75 if possible. I'll put it in that $35.75. I doubt it will fill the leap or long-term options rarely fill at the mid. Maybe I'll get lucky. If it does, okay. If it doesn't, same deal. I'll come back in and adjust the price up 5 cents at a time until the broker fills it. All right, so I wind up closing both of the previous DMA template trades, and you can see the time difference here. The put I was trying to sell didn't even close. I had to run to my kids' school, look at their play, and come back. Then finally had to adjust it down to 26.40 to close. I originally put the selling order at 27.30, I believe, and it wouldn't fill. And I'm going to switch accounts here because I wind up placing the new DMA call option trade in a different account. I'm trading in my IRA mostly now with the active. Well, with these case studies, our tax bills are now in a six-figure range, and I need to be smarter about paying taxes. So all the trades I'm doing for the case studies, I'm moving over to my IRA, so that way it makes my accountant's job a little bit easier. He doesn't have to download 10 pages of trades I've made in my taxable brokerage account because I'm doing case studies and showing people a lot of different stuff. So I'm moving all that to the IRA because I don't have to worry about the tax hit, and I don't have to worry about getting a big thick package every year of all the different trades I made. So my taxable brokerage account now is going to be once a year trades. So it'll make taxes a little bit easier and I will pay less in taxes. So the main takeaway I am trying to make is that when I was meeting with my clients the last few days and I missed the entry signal to get into this trade, I have the personality of putting other people before myself, and so I just wanted to make sure I focus on my clients and I put my own portfolio on the back burner, right? But that fact of how my work schedule got in the way of what I wanted to do personally reminded me of why I switched to passive trading or passive investing now. Because active trading is not very forgiving when life gets in the way. So if you're older, you have a busy schedule, you're caring for an aging parent, you're raising kids, you have a CEO, I mean, you have a high demand job. It doesn't matter what position you have in your job. Like if you have a busy life and a very involved life, active trading is going to be very difficult for you. But passive trading, you can fit in your life because it only takes me once a year, right? As you'll see in this video, it actually takes me about 2 minutes, honestly, to place my trades. But who's going to believe me when I say, hey, I achieve financial freedom and it only takes 2 minutes a year to manage my portfolio? They're going to like, sounds too good to be true, right? You're a scam artist. So I exaggerate and say 10 minutes. It sounds more exciting and it's honestly more believable for most people, right? So anyway, that's what I was trying the point I was trying to make is that, passive trading is very accommodating for people with a busy life or when life gets in the way, and you'll have a higher likelihood of succeeding with a passive investing strategy. Now, is it boring? Yes, right? And you could be young and full of energy and have all this time, but you live long enough and I will promise you life will get in the way. So if you want to set yourself up for long-term success, strongly consider passive trading. What I am teaching you and showing you, in the book is like, hey, this is what I'm using now. It's a passive investing strategy. I moved away from the active stuff and I talk about that, openly. Like, here's why I moved away from it. It worked. It's just that my life and the season I'm in now, it has changed. And so I am changing and evolving with it.